everyone, welcome back to our studio podcast. We turn serious topics into something fun. Now, if you have ever scrolled through TikTok, YouTube or Instagram, you may probably see influencers that receive free products and brand collaborations. Many people assume that these transactions have no tax involved. But is that really true? Well, not anymore. Today, we are discussing one of the hottest topics in Malaysia's digital economy, influencer taxation. Specifically, we are looking at how LHDN treat both cash and non-cash benefits that received by influencers as a taxable income. To help us break this down, we have tax and policy analyst Ms. Ifa, we have our compliance expert Ms. Lubena, and of course, representing the influencer community, Ms. Alia.
Thank you, Is, for inviting us. If this episode is about free gifts, then I'm emotionally invested.
And financially nervous. Let's see how fast that investment turns into a lively and legally relevant.
Let's get into it!
Look at this! I got free skincare. Sample from J2G, Skintific, and so many more. Brands really love me.
Or the tax system knows you more.
Well, that sounds scary.
You know, I think many people will be surprised to learn that a free product can actually create a tax obligation. When most people hear the word income, they immediately think of salary, wages, or money transferred into their bank account. But according to the current guidelines, income can come in many forms. So Ifa, before Alia starts panicking too much, can you explain why a free gift from a brand can be considered taxable in the first place?
Thanks, Is. So, under the LHDN guidelines, it basically comes down to this. If an online activity generates a reward that has monetary value, LHDN counts it as an income. It doesn't matter if you are paid in physical cash or if a brand gives you a free merchandise, it is all legally reportable. LHDN is using its administrative powers under Section 30 4A of the Income Tax Act to explicitly clear up this long-standing grey area. So yes, Alia, if it can be validly repaid, it is legally taxable.
Non-cash like this box?
Yes, if it has a market value, it is count as income.
So I'm not getting gifts. I'm getting invoices from Destiny.
Now, let's look at the bigger picture. Whenever a tax rule is introduced, people often ask the same questions. Why is the government doing this? At first glance, taxing free gifts sounds unusual, but when we consider how large the creator economy has become, perhaps it starts making more sense. So, Ms. Ifa, could you explain the main reason behind Malaysia's decision to formally tax influencer income, including non-cash benefits?
It really comes down to three main structural goals. First is fairness. Economically, receiving a 5,000 ringgit cash and receiving a 5,000 smartphone gives you the exact same material benefits.
But only one can survive tax season peacefully.
Second, prevent cash leakage. Some branch deals were labeled as gift. True, Lubena, because previously many commercial brand deals were intentionally mislabeled as casual gifts to avoid tax.
The classic, it's not income, it's love strategy.
And third, professional recognition. Content creation is no longer viewed as a hobby. It is legitimate business activity falling under Section 4A of the Income Tax of 1967.
So, I'm a professional taxable influencer?
Yes.
This brings us to perhaps the most important questions. How does this affect people in the practice? Let's start with the influencers. Alia, what do you think will be the biggest concern for content creators under the system?
I got a free hotel stay, but now I owe tax.
And that highlights a massive practical hurdle, cash flow mismatch. If a brand gives you a luxury resort stay worth 3,000 ringgit, you cannot use the hotel bed to pay your taxes. LHDN only takes money. This gets even trickier for salaried employees with side income. If you have a regular 9 to 5 job and do influencer gigs on the side, you cannot just wait until the end of the year anymore. LHDN requires individuals with business side income to pay estimated taxes in advance through a bi-monthly system called Simplify 00. which splits your estimated tax into 6 installments across the year.
Okay, now let's shift to business perspective. Many companies rely heavily on influencer marketing today. Ruvena, how does this policy affect businesses and brands that work with influencers?
Company must know record everything, like your products, contracts, proof of promotion.
So PR boxes come with spreadsheet now?
Yes, of course, Anya. Documentation is mandatory.
What about government?
So, for the government, it builds transparency and secures digital tax revenue. However, enforcement is going to be incredibly challenging, especially when dealing with the small influencer whose transactions are very hard to track, frequent and decentralized.
So NHDN is paying fine the influencer now?
Yes.
Oh my god.
Understanding the rules is one thing, but actually complying with them is another challenge entirely. Many business and content creators are probably wondering what exactly do we need to do. So, Ms. Ruvena, could you walk us through the key compliance requirements that companies must follow when providing products or benefits to influencers?
Company must record daily item, contact invoice, and store record for 7 years.
7 years? Oh my god, that is longer than my motivation.
Of course, compliance doesn't stop with business. Influencers themselves have responsibility as taxpayers. So, Ms. Fong, what are the main steps influencers should take to ensure they remain compliant with the tax requirements?
Influencers have to treat themselves like a business. First, log every single product or service received. Second, assign a fair market value to those items based on retail prices. Third, keep clean records of all contracts, campaign briefs, and proof of your postings for at least 7 years. And finally, file using the correct business tax forms so you can properly deduct allowable content expenses, like your editing software or filming gear.
So, influencer equal to accountant now?
Well, actually, more like influencer, accountant, and emotional damage specialist.
In the grand scheme of things, Malaysia is simply aligning with global digital tax standards. Countries like the UK and France already strictly track and tax knowledge commercial benefits for online activities. It's a natural move toward modernizing our tax structure.
That's true, it ensures payers and capture digital income properly.
But challenges remain, such as privacy issues, enforcement, and burden on using practices.
So I post videos, get gifts, calculate tax, pay money, and cry softly.
Simplified, yes. Welcome to adulthood in the digital age.
Thanks for listening to Money Talks, but make it fun! So, until next time,
Stay informed, stay compliant.
And keep learning.
Assalamualaikum and goodbye everyone!
But can I claim emotional tax relief?